What if you could use your crypto portfolio to buy a house or to invest in real estate without ever having to cash it out? That's exactly what the US government might soon allow. Bitcoin, Ethereum, even altcoins on the table. They could soon count towards your mortgage eligibility. No liquidation, no capital gains events, no conversion to fiat. This is a big deal. This is a potential game changer, not only for crypto investors, but for the real estate industry as a whole. We're going to break it down in today's video. What's going on, wise investors? Welcome back to the channel where we help you build wealth through commercial real estate. The Federal Housing Finance Agency, aka FHFA, just issued a directive to Fannie Mae and Freddie Mac, and it's a big one. These two mortgage giants back about half of all US home loans, so they carry some weight. Now, they're being told to develop plans to count crypto holdings as reserve assets in mortgage underwriting. So what does that mean? That means crypto wealth and the overall accumulation of value of your crypto portfolio could soon qualify borrowers for mortgage approval without you actually having to sell those assets first, which has ultimately been the biggest issue many people have had when it comes to wanting to not liquidate their assets and create a taxable event from the crypto perspective. And with the adoption of crypto as a financial instrument that is actually being recognized on this level, this is pretty game changing. So this only applies to loans backed by Fannie Mae and Freddie Mac. This does not apply to FHA, it doesn't apply to VA, USDA, or private bank loans, at least not yet. Still, if Fannie and Freddie roll this out, this is going to set a massive precedent that is likely going to lead to many of those other loan vehicles following suit. So here's what the directive included. Crypto must be held on US regulated centralized exchanges. It must be verifiable by the lender. Fannie and Freddie must develop risk-based models to account for the price volatility. That's going to be a tough one. And proposals must be submitted as soon as reasonably practical, but this is not yet a live policy. So it is being discussed. The ball is rolling in the right direction. It is looking likely, but this is not actually in play quite yet. So while you can't walk to a lender and tomorrow ask them to qualify using your Coinbase balance, we are getting closer than ever, and this is a massive step in the right direction. So for crypto buyers that are investors in cryptocurrency looking to invest in buying a home or an investment property, no forced liquidation means that you get to keep your assets invested and avoid triggering capital gains events, which, as we know, is a big deal. You gain access to home ownership using your real wealth, not just your fiat balance. And for sellers of real estate, a broader pool of buyers are going to bring more demand into the space with more people qualifying, being able to use their cryptocurrency assets. This is going to create potentially faster, stronger offers and ultimately expand the buyer pool and demand for already limited supply. Now, for the market or the industry as a whole, this increases liquidity, it unlocks capital, and it forces mortgage lending to modernize in a way that we know was going to happen eventually, but this is a domino and a big one that is being knocked over right now and could potentially unlock so many more potential opportunities for bridging the gap between cryptocurrency and real estate. So let's say you hold $200,000 in Bitcoin and Ethereum in your wallet. Your cash are really on a platform. You're cash light, but you've got great assets in your balance sheet and in your portfolio. Well, under today's rules, you would need to sell your crypto to show those reserves and have that liquidity available. That, of course, is going to trigger taxable events. It's going to dilute the equity and the cash that you do have, and it removes you from market exposure. Now, if this new directive gets approved, which it's looking likely, it's only a matter of time, you could count that crypto maybe at 70 or 80% of market value as reserves without actually having to liquidate it. Now, of course, that could fluctuate, and the valuation and how they look at these things could be nuanced and a little bit different once they finalize it. But lenders will still build in the ability to count that towards your overall financial picture. So the financial system is adapting to how modern investors are building wealth and holding wealth. And this is something that I believe is going to be the beginning of what becomes more common adoption amongst loans and mortgages across real estate, and how this ties in with cryptocurrency headed into the future. So if you are a crypto investor, I would say start preparing some mortgage-friendly conversations if you're looking to invest in real estate, and just start thinking and seeing what options are available and out there. Now, if you're a real estate investor, update your talking points and your marketing and start thinking about how crypto-backed buyers may soon be coming into play here, and that they actually may be a major demographic that is untapped that you may want to market to, that you may want to get creative with, and thinking about how those can tie in with your overall investment strategy or your business model. Now, if you're a lender, I would just say begin modeling and thinking about how your business, your bank, your shop is going to factor this in, and how you can leverage and carve out yourself as a brand authority and expert in this particular niche, because it is still early, and we all know that the early adopters, the ones who lean in and get in front of the pack, are always the front shakers and early movers who benefit the most. So this isn't just a little small, tiny policy tweak and headline. This is a big signal. Crypto is moving from speculative side asset to mainstream financial infrastructure. And if Fannie and Freddie execute on this and actually bring this to fruition, private banks and other institutions are likely going to follow. And for investors, this could open up a new chapter where you build, you preserve, and you leverage your wealth in a way that we've never seen before. That could be a massive benefit to our economy, to the industry, and to individual investors as a whole, all without having to give up your core assets. So I'm just curious, what's your take? Would you use your crypto to buy a home? Let me know in the comment section. If this video is value, hit that like button, subscribe to the channel. Don't forget to turn on the bell. And if you want to check out all the great resources we have down below, lots of free stuff in there for those that are looking to build wealth and break into commercial real estate. We look forward to connecting with you. Until next video, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.